Hello everyone, it is Thursday, May 5th. I'm your host, The Cowboy, and welcome to another edition of the Charts of the Day. This is Elliott Wave Cafe. Let's get started. All right, well, I cannot help but talking again about the S&P 500. This is where the action is. It's been just a crazy volatile market. So I feel that I need to make one more video about it. And you guys might be tired about it, but it's just, you might be tired hearing about it, but it is definitely interesting, because this is where the action is been lately in the S&P 500, in the NASDAQ, in the tech stocks. In the crypto land, it's been okay. I mean, especially today, we've had a little bit of a sell-off in Bitcoin, but we're not going to talk about that. So, the S&P 500 here yesterday, I made the video after the Federal Reserve had their meeting in there, and we had a pretty nice rally. And one of the things that I was afraid of was, well, listen, what if these guys are going to sell into this rally and this was just a little bit of a hangover, right? Yesterday, everybody was kind of drunk on this beautiful gains on this, rally in the market, this huge rise. And then all of a sudden overnight, people were like, I don't know, man, this is, they're still going to raise rates. Inflation is still going to be high. Maybe they're going to do 75 basis points, in the June meeting. So why not just sell them? Maybe let's just punish those super excited people that yesterday bought the market, and let's just show them what's going on, that it's not that easy. Right. And, I was talking in the program too about this a little bit. And it's funny today, now I didn't expect such a big sell-off, but, here we are, it happened. And, if you look at this daily chart, it's not like, the end of the world, right? You're not having, mind you, there was a 4% decline, but it's not, maybe because, we've gotten used with such big volatility in these charts, it doesn't look as aggressive. But we engulfed yesterday candle, right? That's, you could say that that's a bearish engulfing, and you should continue to the downside under this circumstance. Now, I'm not going to rush too much and just say, yeah, you're going to sell lower. I think the market is still sitting in a very good support in here. We were rejected. There is a chance that you might make a new low in here, but I still think, there's probably going to be some kind of a rally coming in here. So just to kind of recap on here, I'm thinking of this kind of larger move in here being a wave 4 of this wave 1, right? That could still unfold over, or this could be wave 1 up here and we're in some kind of a larger second wave declining. And I'm kind of debating between a couple of scenarios. I'm thinking a possible triangle, maybe in formation in here. You can do, let's say, a WXY in the leg A of a triangle. You can do maybe a zigzag. So I'm going to show you the channel too. I think you saw that into the NASDAQ 100. So I'm going to go right there and then right there. So right now, the prices are contained between these two parallel lines. They do look corrective. The risk is, as it always is with the move, this kind of start looking correcting and then you break to the downside, that you can do a quick flush lower, and then this kind of screws up the corrective pattern and becomes more of an impulsive move to the downside. But for right now, we are pretty well supported back in here, and there is a chance, actually a pretty good chance that, even if you make a smaller new low, you can still kind of do some kind of an ABC in here and continue to correct higher, right? So we'll just watch prices bounce between these levels. You can even do like a central line in here, and oh, that's perfect. Look what I did. Let me just use this to do my center line. It's probably going to be a little bit better if I do that. So I'm going to go in the channel in here and just show the middle line. There you go. And you can use that as levels to kind of provide resistance, or if you break back above those, provide support on the way higher. So there's several ways to kind of skin this cat, as I was just saying yesterday. But I think near term, I continue to not be, super scared about the sell-off that we've gotten into the S&P 500 today, and just assume that the market will crash lower. I think these are just kind of volatile moves, but you can notice how, you can quickly get rallies to the upside as well. And the pattern here, it's too unclear to say that this is the beginning of a larger third wave. And even if it is, right? Let's say that for whatever reason, this is a 1, and then this is an A, B, and then this is some kind of a C wave. I just don't know how you would count that as a C wave of a flat, with the way this pattern looks from these lows, and this is a third wave decline. That means that this would have to be wave 1, and you're still going to get a wave 2 setback, and then a 3, a 4, and a 5, right? So, I don't think things are just going to, all of a sudden just flush to the downside. So I'm watching this. We're actively trading it. Actually, we bought some S&P 500 here into these, sell-offs today in the NASDAQ as well. On the NASDAQ, I was able to kind of get out and close it off. We had a quick sharp rally at the end of the day, so I took it out. But the S&P 500, I'm still going to hold on to it for a little bit. So just there's trades. I mean, I trade on the futures all day long. You go down and you can see. I mean, you can see on a 5-wave, on a 5-minute chart, 15-minute chart. I mean, it was just a beautiful 5-wave decline that you can take advantage of. So these are, I'm not suggesting you do that, but it's, there's trading opportunities in this market. If anything, it's great for volatility. I mean, volatility sellers in here, they're just like, juicing all over this, because, when you have a VIX that's pushing back up into 30, you can just, the premium is expensive, and you can, like yesterday was a day to sell calls. We sold some calls. Today was a day to sell puts and try to take the other side of the trade, right? So, and especially, everything that kind of happened today was mostly related to the big guys, the big dogs in the market. You're looking at Amazon, you're looking at, Apple and Microsoft. These guys are the ones that have been, hammered, and you're getting such a big declines in the market. The rest of the market that's in the tech sector that's been already beaten down. So a bunch of the stuff, let's say that's from the ARK ETF and even others, right? That are not necessarily, as high beta. Those have been stable. I mean, they sold off a little bit, but not that aggressive. And that shows you that those horses have been already beat down a lot, that even on a day like today, they're not going to react that much. And maybe there's opportunities there, and I'll show you here some of the things that I'm kind of watching. So anyway, going back to the count, possible an A, B, C in here for a W. Let's do this as an X, and then look for an A, B, C. See what happens. If this if this in any way it's over to an A, B, and then down in C, then you're looking to new highs again, right? Because you start to have pretty good equality here. I mean, let me just kind of measure this up. Right there and right there. I mean, this is perfect equality. What am I even talking about? Okay, I got it. So there you go. You have equality. I mean, look at this. Look at this nice decline in here. This could be considered a nice impulse. Then you look at another impulse. So equality, and then you have the rally. So, I mean, it's pretty clean and pretty good if you ask me. Again, I'm not going to get excited necessarily. I need to see more from this market, but I would not be, super bearish in here and just say, throw everything out the window and just, go. So we'll see. I think the market still has a lot to prove. So anyway, I wanted to jump over and take a look at a couple of other things that I have prepared for you in today's video, besides, kind of what happened here into the S&P 500. We're still into the 38% retracement in here. If it's a triangle, which usually kind of terminates into the 38%, you're looking at this as being a wave A of a triangle, or a wave double, or a wave A, because you can do that in a double zigzag. And you go, so let's go in a wave A. And I have a little issue here with this decline, but that's okay. So let's go in an A, B, let's say C in here, or a WXY for a wave A, right? And then you go up in B. So that's an A, B, C, D, and E. It's not the perfect triangle. Maybe I should have done the subdivisions a little bit better in here, but this is somehow where a triangle could kind of take shape, right? You're starting with a decline, and then you're moving lower. Now, for that, you have to assume that that's a fourth wave, because you cannot really have them in a second wave. And that creates a little bit of an issue with the larger second wave, with the second wave that we had prior. But, it's something that I'm willing to kind of look at. So, all right. The other thing that I wanted to show you here is this chart, and you might be familiar. I'm not sure if I showed it in here or just in the pro room, but it is something. And actually, this morning we had a webinar of about an hour and 15 minutes. We've talked about a bunch of macro events as well, and charts, and we ran through a bunch of altcoins, because those had some pretty bearish closes in there. I'm going to have a little bit of coffee. Have you ever seen a YouTuber here that's drinking coffee in the middle of the presentation? Well, that's me. It's about 4 o'clock here in Chicago, so I'm I'm trying to get juiced up for the night here. So anyway, let's just take a look at this chart. So you're looking at these yellow shaded zones are where you have basically rate hike cycles. And let me see if I can, okay, I wanted to see if I can move this a little bit and maybe show you. Okay, I'm going to scroll this up. So anyway, this is the S&P 500 back in here, right? And this at the bottom, you'll see right now, I'm going to scroll up. This is the Fed funds rate, right? And you're going back from 1995. This chart travels a little bit back to 1988, but there's not a lot of information back there. So every time you had a rate cycle that starts in the markets, you had a rally in the stock market, and you can see in here from 1994 to the end of 2000, right? They were in a pretty interesting hiking cycle with a little bit of a flat formation, but the market was just rallying there, right, aggressive. Then you start another one at middle of 2004 all the way up to mid 2007, right? Then we had the great financial crisis, and that was a pretty intensive hiking cycle that started from roughly 1.5, and they took it all the way to over 5% in there. And here is what the market did if you look higher, right? It's pretty good rally. I mean, it was a B wave, mind you, but it was still a rally in the markets. They're beautiful flat right in there. And then then we were at zero for years on end, from 2009 to 2016. So you're looking 7 years of just easy monetary policy, get us out of the great financial crisis, don't do recessions in here, stimulate the economy as much as possible. And of course, you've had this, this kind of huge rally, but so what? I mean, look at this. They started to hike back in 2016, 2017. They were flat for a little while. Then in 2018 again, and they continued to kind of raise rates until mid 2019, when they went up to just above 2%. And guess what happened? Look at the stock market. It just kind of continued to rally up in there. And you've had the kind of the famous, because that's when the Fed Powell. So if you take a look at this 2018, the end of 2018, December, that's when we had the famous Powell put. And he reversed course into raising interest rates. I mean, you can see in here he was flat for a couple of times, and then for a couple of meetings, and then bam, they shut him down, right? And then you started to have the COVID crisis and a big sell-off in the markets. So again, I just wanted to show you a big rally in those markets. And now here we are at the first hike. This one is not updated yet, the one that we had yesterday. So that's going to go up towards 1% in there, right? And the market is sold off a little bit in here, right? Because that's kind of what it does a little bit when you have the beginning of the cycles, and then it turns. Even in here, it kind of sold off a little bit. So what's this blip? You're going to sell off a little bit in here, maybe a second wave, and then you're going to, shoot up in a rally. Or if that's a 4, maybe you're going to get a 5th wave higher, right? As they're kind of hiking, because who knows how far they're going to hike. I mean, look at this trend line coming in from those highs, touching back in here, touching this. They're going to hike where? To 1.5%? We'll see. I mean, that's not that many hikes down the road. That's only like 50 basis points more, and you're there in the trend line. And this market is already, crapping all over. So I don't know, but it's just an interesting thing to look at. So I'll leave that up there so you guys can study it. Then I wanted to show you quickly on the Fang stocks. Let me move this over a little bit here so you can see this a little bit better. There you go. I just moved my recording screen down. I can't use too much because then it takes too big of a screen, because then it takes a long time to update to YouTube. So, and I don't have a lot of time. So anyway, this is the Fang Index, right? And that's the 200-day moving average. So what you got in that Fang Index, what you got. You got Apple, you got Microsoft, and I put in there Bitcoin just for the, kicks and giggles. And then you got Google, you got Amazon, Facebook, and Netflix. And I kind of sorted them up in the order of their strength and regarding their 200-day moving average. So Apple, still the strongest, barely holding above the 200-day moving average at 156 at the moment. cracking below it. Microsoft already cracked below it. It's at 277. So the second strongest one in the bunch. Then you got your Bitcoin, which, scared a bunch of traders today with the break towards 36,300 as we're establishing a little bit of a, level below the 20-day moving average. Nothing good happens below that. We got to go and regain it. We'll see what happens if we're going to do or not. But that's, that's a discussion for the guys in the pro room. So here is I have the Google, and this is, just kind of been taking a little bit of a hit in here. So much farther away from the 200-day moving average at 2330. And then you can get your shopping list ready because Amazon, it's in a nice decline and it looks like a 3-wave move. They all look like 3 until they become 5, so be careful with that. I wouldn't necessarily jump straight onto it, but it starts to come into some nice levels. I think people are gonna get excited about that. So 23.28, and then you're looking at Facebook, which is it recovered a little bit. So maybe I should push this above Microsoft in terms of its performance, or if in terms of its proximity to the 200-day moving average. Sitting at about 208, and then you have Netflix, which was completely destroyed, and just kind of, poor Netflix sitting here at 188. So go ahead and watch Netflix as much as you can, so this stock can rally, because I own it on the long side, and I've been building a position here into these lows, and I bought it a little bit higher too. So I have an average of, I don't know what I'm at, about 220, 230 maybe in it, or maybe a little bit lower. I gotta go check. So anyway, this is a little bit of a look on what's going on in the Fang stocks, and how we can kind of gauge the sentiment in there. And when these guys sell off, the markets will feel it. Then I wanted to kind of close off by showing you, remove the screen again. I want to show you some relative rotation graphs in terms of where we are in the sectors. You're looking at the dailies in here, and you can see how in the improving quadrant, you got technology, which is looking pretty good. You got strong coming, communication sector. XLY, the consumer discretionary, is still beaten down because Amazon kicks its butt. But, XLC, you got some Facebook in there, you got some other ones, and XLF is pointing lower, and the other ones are things that are rotating on the daily time frame, not in a good direction. So you really don't want to be in an industrial, and all these defensive sectors are starting to kind of lose a bunch of ground. And you can see that the rotation actually happens into XLK and XLC in here. And I'll show you a quick move on the weekly as well. I'm going to update this. And, here we are. I'm going to make them fit in there like that. I'm going to make this a little bit bigger. So you'll see XLC, this is on the weekly time frames. XLE has been kind of coming down, a little bit of a coil back towards leading, but I would not trust it much at the moment. And then you're losing a little bit of ground on the XLU, so utilities and healthcare and stuff like that. And then here it comes on the weekly, on the improving quadrant, it comes XLC, XLY, and XLK. So we wanted to look at sectors that are coming from lagging the S&P 500, which is the benchmark in the center, pushing higher into the improving, and then try to find, some good qualities companies in there that have been beaten down, that they're below their, maybe near their 200-week moving average or something like that, and, with a good kind of count on the Elliott wave structure, and then pick those up for a move back into the leading, where you have a bunch of these very, very defensive sectors. And I'm going to show you quickly here before this video gets too long, just a quick look here. I touched on this webinar this morning, but a quick look at the industrials. What's going on? Oh, I was out of one of my positions there because it's 4 o'clock. The market's closed and my position did not get filled, so they kicked me out. So I got to redo that limit anyway. So here it is. We're looking at the industry ETFs, right? So you're looking here, semiconductors. You're looking at solar. You're looking at water. You're looking at home builders and transportations, jets, stuff like that. And this is on the daily time frames. So look at the semiconductors here, trying to get into the leading quadrant, right? Pretty good. Look at 10 at the Invesco Solar ETF. Very nice. You wanted to kind of take a look at the sectors that are into this improving, moving into the leading quadrant. So they need to head into this kind of northeast direction. in there. And then the sectors that are losing ground a little bit in here, you can see them down below. And then I'll show you on the weekly how they look in here. And let's just fit them all. Here you go, make them a little bit bigger. So on the weeklies, you can start to kind of pick at, back in here you have the home construction, right? And you can still have some XRT. I mean, the closest they are to the benchmark here, the, more low volatility, they're just kind of, not as high beta. They're just, dragging along. They're not making huge moves. But, the further out you go, you can see how, the water, the TAN, the IBB biotech in here, they're looking like they're coiling down a little bit on the weekly time frames, but I think they still might have potential to turn and push back up higher here into the leading quadrant. So we're paying attention to this. We're looking at stocks inside this and analyzing them and kind of see what happens and if there's anything that can be picked out of there. And I have a similar one for crypto as well, that we've touched on in the room. So anyway, guys, I'll leave it at that. Thank you for watching. Again, I appreciate you being here. Don't forget to subscribe and like always. Visit us in the Pro Room. Say hello on Twitter. Visit me in the public room on Telegram as well. All the links are below this video. Check out also my Substack letter. You might get a kick out of it. I think I have to write another one here, preparing it for this weekend. So I'll talk to you later. Bye-bye.